Today we're talking AbbVie Pharmaceutical, a 5% dividend cash cow with strong future growth potential. We're going to look at the fundamentals, future business plans, some technical analysis, and where would be a good place to buy in. AbbVie, stock ticker ABBV, is well positioned for sustained growth in the future. You can see that AbbVie holds strong leadership positions in each of the drug markets below, such as immunology, oncology, neuroscience, and allergen aesthetics. AbbVie is currently trading at $104.44 with a market cap of $184.386 billion, a beta volatility of 0.81, which means AbbVie's share price is slightly more stable than the general market. The PE ratio of 38.40 is a little high, but because AbbVie is a pharmaceutical company, investors generally look at which drugs they are producing. While these drugs are in production and going through the different phases for approval, they are not producing any earnings. Once the drugs are approved and go to market, then they start bringing earnings in and the shareholders should see a return. Additionally, AbbVie has a dividend yield of 4.98%, which annually means ABBV is paying out $5.20 to their shareholders over 4 quarters. Here is the earnings history for AbbVie. They currently have a Q1 earnings projection of 2.72. You can see all 4 quarters of 2020 they've beat their projections, and we should expect them to this quarter as well. Here are some of my favorite numbers on AbbVie that we'll talk about today. As I said before, they have that dividend yield of 4.98% with the annual payout of $5.20. Additionally, they only have a 42% payout ratio, which means they have substantial room to increase their dividend in the future and continue to give back to the shareholders. The 5-year growth rate of the dividend is also 18.5%, which is very, very high and something that we love to see. And AbbVie has also been increasing their dividend consecutively for the past 7 years. One of the business models that AbbVie really places precedent on is that they want to balance increasing their share price and supporting growth of the company, as well as returning dividends to the shareholders. They can do this by securing strong operating cash flow to support stock growth, return of cash to shareholders, and also debt repayments. The steps to secure sufficient cash flow is in the continued research and development of multiple pharmaceuticals, which will eventually go to market and increase the company's earnings. Here is the all-time dividend history of AbbVie. You can see when they started out, they were paying below 50 cents a quarter. That first big jump was in 2018, and you can see that we've really had a substantial jump every year since then. AbbVie has done a really good job of increasing their dividend over the past 4 years at a substantial rate. As long as they do a good job continuously researching and developing new drugs which can go to market, they should be able to continue these dividend increases over time. AbbVie currently has a price-to-book ratio of 12.08, which means the share price is trading 12 times higher than the book value of the company. I also want you to pay attention here to that forward PE ratio, which is 8.45. At the beginning of the video, I explained when the drugs go to market, they will start producing earnings for the company, which in turn will drive down that PE ratio. And the forward PE ratio of 8.45 is a number that we like a lot more than that 32. Here are some other great numbers on AbbVie. Profit margins of 10.08% and an operating margin of 34.17%. And additionally, I want you to look at that return on equity, which is 129.89%. ABBV currently holds $7.96 billion in total cash and have $87.1 billion in total debt. AbbVie currently has 11 times debt as they do cash, which is not great numbers for the company, but I believe as these drugs continuously get pumped out and begin producing income over time, they will be able to manage this debt in the future. Hopefully they won't cut the dividend to deal with this debt problem, but I don't see them doing that because over the past 7 years they've placed precedent on increasing it consecutively. Before we look into the future business plans of AbbVie Pharmaceuticals, I want to remind you guys to like the video and subscribe to the channel. Let's shoot for 10 likes on this video. Leave me a comment down below letting me know what you think of AbbVie and if you're holding a position in your portfolio. AbbVie is currently diversified into many attractive sustainable markets, and they have a pipeline of innovative drugs waiting to be pushed out onto these markets once they are approved. They also report they have a compelling capital allocation philosophy, which is balanced between supporting growth and returning capital to the shareholders, as we've explained before. Here is a list of AbbVie's research and development pipeline. You can see they currently have the most drugs in phase 1, as well as a substantial amount in phase 3. This is something that I really like to see because as these phase 3 drugs are pushed out onto the market, they should return in increased earnings for AbbVie. And they already have a whole bunch of drugs lined up in phase 1 ready to move up this pipeline and on their way to be pushed out to the market themselves. Here are some anticipated key pipeline events for the near future in 2021 and 2022. I'm not going to go through these. You guys can pause the video and look at them if you'd like, but there are 15 drugs in the category regulatory approvals that we should expect to see approved very soon. We're now going to talk a little bit about each of those 4 markets that I mentioned AbbVie was in at the beginning of the video. They currently hold leadership positions in the US across all areas of the aesthetics market. 66% market share in toxins, 46% in fillers, 67% market share in body contouring, 54% in plastics, and 51% in regenerative medicine. I don't know about you guys, but I expect plastic surgery and aesthetic surgeries to increase over time, and AbbVie currently holds the strongest position in this market for the time being. In addition to that aesthetics market, they're also in the oncology market, as I mentioned before. They're really trying to corner this oncology market in areas that do not currently have a lot of drugs, such as regulated cell death, tumor targeting, and immuno-oncology. AbbVie also expects to see significant growth in their neuroscience portfolio, which is currently a $5 billion portfolio and focuses on subsectors such as migraines, psychiatric, neurodegeneration, and neurorehabilitation. Here is AbbVie's 1-year chart with that current share price of $104.44, and they are currently trading at plus 6.8% on the year. You can see how quickly they shot up after that March dip from coronavirus, and they had another small dip between July and November, but they're back to trading at almost 52-week highs. The analysts are currently recommending AbbVie to be a buy with a rating of 2, and the analyst price targets are a low of $97, an average of $120.48, which is still higher than where they're currently trading at $104, and a high of $140. So here is the chart zoomed in. This is 4-hour intervals, and it goes from early December to February 14th. That purple line right there is the 20 SMA, the 20 simple moving average, which essentially charts out the average of the closest 20 candles at a given point. That purple line on the bottom there at 44 is the RSI, which is the relative strength index. If the RSI is above 70, that means that the stock is currently overbought. And if the RSI is below 30, the stock is oversold. You want to attempt to get into positions at this time. AbbVie currently has a relative strength index of 44, which isn't terrible. It is on the lower side, however not below 30, but the share price has already begun to climb back up to that 20 SMA line, and hopefully it can cross it, giving us some nice confirmation. It's also important to note here that there is some resistance around $110 and $112, but I believe over time AbbVie will be able to exceed this amount quite easily. All in all, if you're holding for the long term, AbbVie is definitely a good investment as they have strong potential growth for the future. And I believe at this time of $104, you can easily take a position now and buy the dip, continue to average down if you need to. And it will be a strong investment for the future alongside that 5% dividend yield. Thank you guys for your time today. I want to remind you to like the video if you found this content helpful and subscribe to the channel. as well as turn the notification bell on. If you want to check out another high percentage dividend stock, you can watch my video on Annaly Capital Management, which currently has a dividend yield of above 10%. I'll throw that up on the screen and leave a link down in the description. As always, I'm Patrick Zimmerman. Thank you for your time, and have a nice day.